Hi, everyone. It's Joe Veneri, the host of Fitt Insider, the show where I talk with the entrepreneurs, executives, and investors who are redefining the business of fitness and wellness. Today, I'm joined by Fritz Lanman, the CEO of ClassPass. In today's episode, we talked about why the company changed its business model and pricing over the years, the opportunity for growth in areas like corporate benefits, wellness experiences, and streaming workouts, what makes ClassPass worth $1 billion, and Fritz's plan to take the company public. Let's get into it. Hi, Fritz. Welcome to Fitt Insider. Thanks for joining us.
Hey, thanks for having me. Excited to be here.
Obviously, I think ClassPass is a name that's well known in the fitness industry and beyond. But for anyone who doesn't know the ins and outs, can you give us like the 60-second high-level description?
Sure. Yeah, we call it the ClassPass is the Netflix for fitness and wellness. So it's a recurring monthly subscription membership. And members, as a member, you can spend this virtual currency, these credits that you buy on fitness and wellness experiences, either in different ones in your hometown or in any of the 30 different countries that we exist in across the globe. So, one day you can do yoga, the next day do boxing, the next day go to a traditional gym and lift weights. And then if you show up on a business trip in Dubai or Hong Kong or New York or Missoula, Montana, you can get off the plane and go find a workout.
Yeah, it's an incredible, value proposition, and certainly kind of opening up the world to experience those different fitness experiences. It's something you've been involved with for quite some time now. Led the seed round, served as executive chairman, now the CEO. Kind of what got you excited about the company and the sector that you got involved in and kept engaged for this long?
Yeah, good question. I think there's a couple of things that got me excited, and the reason I got sort of increasingly involved. As you mentioned, I led the seed round. I then led the Series A, and then Pyle asked me to step in as the CEO after about a year of kind of co-operating the business together. And my background, I'm a tech geek. I had worked at Microsoft for about a decade. This is the fourth startup that I've helped build as a co-founder or a CEO, and an investor in about over 100 different tech companies. But what caught my eye and got me to really spend time on this one first was just the amazing experience that is kind of group fitness, and the idea that a routine rooted in variety, but still a routine, was, I think, the most successful way for me to work out. And I personally lost over 70 pounds like using the service, because I always struggled. I was like a former athlete, but always struggled to get into routine around just running or the same workout at the gym every day. It wasn't until I kind of tried group fitness, which really happened through diligencing the idea behind ClassPass, that I was able to like really get into working out. And it was the stimulation, the camaraderie, the immersiveness of the experience, having an instructor, and the variety that kept it interesting. So, this idea of one day being able to do one workout, the next day something completely different. And I habituate into that routine and that variety routine, but it's really been successful. So I just believe in the sort of the format as a really effective way to work out. The second was from a business standpoint. I just saw that, these classes only have 30 to 40% capacity utilization as an industry. And so it felt like a really great opportunity for an aggregator to come in and help fill excess capacity at these studios, to have a centralized indirect marketing channel that could help these small business entrepreneurs, for the most part, improve the quality of their business, not only from filling empty seats, but also getting great data about how to improve their quality of service. And then third was, I felt like I was uniquely situated to get to contribute, because I have a lot of experience in technology and building tech products, but also in building machine learning products, and saw an opportunity for algorithms to contribute to help revenue maximize studios, inventory. And so those three things, falling in love with the experience, seeing it as a good business opportunity, and then thinking I could personally kind of help introduce machine learning to the industry in a way that would be really helpful and accretive. That's why I kind of just increasingly fell in love and got more and more involved. I went from being an observer and fan to an investor to a board member to running the company.
Yeah, I think there's a couple of things in there that I want to dig into and that are very interesting. When you have the idea of the aggregator, almost like the marketplace, where you're not only serving the consumer who's buying the subscription and now using this digital currency, but the studio partner. And of course, there's a balance between how do we give someone this passport to at one point it was unlimited classes and has moved to you mentioned the credit system where it's based on demand, but at the same time kind of balancing that with the studios feeling like they're valued and having to, find a balance between that. Do you think at this point, like ClassPass has arrived at a sustainable model that can serve both of those people on both ends of the spectrum?
Yeah, great question. And the answer is absolutely. And I think that's been reflected, since we moved to the credit system now approaching, I don't know, almost 3 years ago. So, when I first stepped into the business, you're right. There was ClassPass was unlimited workouts for, I think, $100 a month. And that business model, while it was a great consumer proposition, it didn't really serve ClassPass very well because it was insanely expensive. You had, people who were going once, maybe even twice a day to different venues. And we were paying out our partners on a variable basis. So they were, obviously very unprofitable. But, it was really hard to achieve was both a business model that wasn't working for ClassPass and wasn't working for partners. And studios hated it because it was devaluing their direct pricing, their inventory. It made it look really cheap. And as a result, those studios, some premium brands were unwilling to partner with ClassPass. And, some studios that we were working with were really limiting the number of spots that they would give us or the number of times a customer could visit. The migration to the credits model. So now you can choose from different tiers based on your budget, whether you want to spend $60 a month as a consumer or $125 a month, or you can buy extra credits during a cycle if you're having a particularly motivated month. What that did was it allowed us to help our partners price their excess capacity according to what it's actually worth, the expected value. And so that brought premium brands like Rumble or Solidcore, or others to the platform that wouldn't work with us previously. And it opened up more spots at brands like Barry's Bootcamp that historically had been reluctant to give us spots in peak time classes that weren't worth, a remnant rate, but hey, now you can get away with charging more. So it was actually really interesting in that even though ClassPass kind of got more expensive for consumers by moving to credits, and there was some uproar about that from people who were getting good deals, for the majority, our NPS scores went up. Our growth from the consumer side accelerated. Our partner happiness and retention went way up because ultimately we're helping them fill a bunch of spots that were going to waste at $0 before. And ClassPass has a sustainable, take rate margin structure. So it truly was, a revolutionary evolution for us, that made our model a lot stronger and more sustainable. And now it's been 3 years, and numerous private equity investors have scrutinized it at scale and quizzed partners at scale and talked to customers at scale and surveyed them and have felt, people who are smarter than me have validated that, it's really working for all constituents.
Yeah, I think going through the process of, changing the pricing structure from the consumer perspective while also managing, the value proposition for the studio partners is certainly difficult. At this point, like you said, having made the switch some 3 years ago, is it just a matter of changing that perception, maybe within the industry and even thinking about that a little bit deeper among studios and studio partners to say, hey, we're actually want to give you this dynamic pricing tool, want to fill the, as you call it, the spaces that go unused, versus saying on the flip side, hey, this is a passport where we just want to have unlimited classes and get people through the door, and whether or not they stick around or whatever amount they're paying doesn't really matter. So just changing that narrative almost with those partners.
I think, yeah, it's a great question. I think the good news for us is the vast majority of our partners are seeing a lot more money from the change to the credit system, and so they're psyched about it and appreciative. And our partner retention, is off the charts. Very few in the history of the company have left, and that number's gone down since the number who have left have gone down since we moved to this model. And as I mentioned, brands like Solidcore or Rumble, Rumble came on, and not only did they come on, but they actually agreed to do a case study because they were so surprised to see that they're able to generate 20% incremental revenue with minimal, almost non-extent cannibalization, that they let us do a case study because they're like, yeah, everybody should be aware that the model really works really well. The challenge of that transition or the cost is that some partners who had a lot of mistrust with ClassPass because or just didn't like the way it worked or didn't like the brand was because of the old model, right? And so to some extent, we continue to fight the perceptions that may have been true in 2015, but haven't been true since 2018. And you've seen that in some press sentiments. On the other hand, I also think sometimes people will blame ClassPass if things aren't going well. It's sort of easy to point the finger at the aggregator, but certainly we've now proven it for a lot of our top brands. And partners don't have to work with ClassPass if it's not working for them. But I think that correcting sort of and updating people's perceptions. I mean, I personally went and met with probably 250 to 300 of our partners around the world to explain the change, because most of them understood the credit system pretty well. I think now most of the skepticism that we face is in asking people to say, hey, instead of manually pricing your inventory, let's let algorithms figure out the revenue maximizing price per spot. And that can be pretty scary, handing over your business potential to an AI or machine learning algorithm can be frightening. And so what we've done is just encourage people to try it, and put our money where our mouth is and said, we'll guarantee you that you'll make more money using it, because the more money that we send to our partners, the more money we make under our new credit system. So there's certainly been challenges in terms of updating partners on why we made the changes we did, acknowledging that our old model was very broken for them. And it's taken some time to earn back trust. And ultimately what matters is delivering the goods, giving them an opaque way to monetize excess capacity in a way that protects their direct business.
Right. And so with that, and you said, people, the way that you phrase it, maybe way smarter than you or maybe above your pay grade even have validated this in terms of speaking with the consumers and looking at the business model, led the company earlier this year to raise new funding, valued at more than $1 billion. So we're saying, hey, we've landed on something that is adding value, is sustainable. Now we need to scale it. And more recently have gone down the path of, acquiring a couple global aggregators to expand the reach of ClassPass. Like, what does that $1 billion valuation mean? How does a company justify that in terms of growing and looking forward?
Great question. Again, I'm not the private equity investor. I write checks as a personal investor in startups when it's, a small team and an idea. So I'm less sort of versed on these valuation methods, but obviously the valuation is based on, the revenue growth, the revenue scale, the growth rate, and the potential for the business to be, much bigger, since these investors are looking for a 5, 10, 20x return on their investment. And I think, we have a lot of wind in our sails. I mean, first, just the secular trends, modulo, before the pandemic, the secular tailwinds in the world are that people are caring more about health and wellness, are that people are finding that group fitness especially is super, super, super valuable and important. I think this industry desperately needs an aggregator. Like most industries have an aggregator to help them fill excess capacity. And I think the model that we landed on is a really elegant one. It's much less competitive with our partners than, say, an Expedia or a Booking.com is for a hotel room, because there's real customer trades to booking through ClassPass. You have less predictable inventory access. You can't necessarily choose to get a spot at that hot instructor, hot class at a peak time 7 days in advance. You can't choose your bike or your spot or a treadmill in a Barry's or a Rumble class. So, what we've invented is really a way for partners to protect their pricing power with their direct audience, those who are more price sensitive and willing to make the trade-offs of ClassPass to come through our door, deal with those trade-offs, but in exchange, get better pricing. And we have a model where, that pricing is hidden behind a subscription paywall. We give algorithms to rev maximize them. So we're aligned in terms of wanting to make them as much money as possible and not artificially lower their prices because we would make less money. So I think those things have come together and people saw, hey, strong tailwinds. Through some iteration, companies landed on a pretty great model, has really fast growth. And then they go and survey the partners and the customers and realize, okay, people are pretty fired up about this consumer offering and about these partners. And then they look at, where is the company going to go from here? And we've scaled from 4 to 30 countries in the last 2 years. The pandemic's put a bit of a break on that. We've launched a big corporate business. We have over 1,000 customers there. I can talk more about that. And that's taken off. And we have introduced wellness to the platform. So adding things like spa treatments, massage, facials, cryo, acupuncture, sports therapy. And, investors, I think there's a lot to be excited about in terms of the potential for ClassPass to do what we've done for boutique fitness, but across the whole world, and in boutique fitness, and then potentially to do it for some other categories as well.
Yeah, a couple of those pieces that I definitely want to dig into. You mentioned the corporate efforts there. You said 1,000 partners. Maybe that was, you can correct me if I'm wrong, but how substantial is that business right now, and how big of a piece of the puzzle do you think it can be?
Yeah, good question. It is already a large and growing part of the business. Yeah, you're right. I did say 1,000. So we have over 1,000 companies that have chosen ClassPass as their health and wellness benefit that they encourage their employees to sign up for. And our model is super flexible, right? We don't charge these corporate HR teams a fee like other players in corporate wellness. Its traditional model is to charge the HR team for every eligible employee. We only charge for the employees who are active, and we don't even charge the corporate. We just say, how much do you want to subsidize their health and wellness routine? Then those employees choose one of our plans, the same plans as a consumer. It's just that if you're at Google or Goldman Sachs or Morgan Stanley or Gatorade or Southwest Airlines, you're getting compensated for part of the fee that you otherwise would have paid for as a consumer. So, I think we're pretty fired up about this offering for corporate. There's a lot of competition in this space, but most employers, I think, have realized that offering a good health and wellness benefit is important for employee recruitment and retention. I think most of them have realized that them cutting their own deals with individual brands is very laborious, and certainly from a technical standpoint, there's not an easy way for them to give employees the ability to book across a swath, a catalog of venues. And so, and they love our model because it doesn't require them to pay a bunch of money unless people are actually benefiting from the benefit itself. So I think it could be a nice part of our business.
Yeah, to the point on the competition in that space, it's certainly growing. We previously had Marco Crespo from GymPass on the show, talked about how they're building a three-sided marketplace for corporate wellness. Do you look at ClassPass and GymPass as competitors, or do you think there's room within the market and even globally for both to kind of have a piece of the pie?
Yeah. I mean, certainly, GymPass is an impressive company, and Cesar, the founder and CEO, has an awesome story. He's from Brazil and self-made, and incredibly smart and charismatic and visionary. And we always view competition with forcing us to level up our own game, so we encourage it. It's a bit different in that it's their one thing that they do is that they're just a corporate fitness provider, and they have a very different model, and they came obviously out of Brazil, so they're huge in Brazil. We entered Brazil recently. It's going to be tough to compete down there, especially so because of how bad the COVID-19 pandemic is spreading in Brazil. It's probably one of the worst, if not the worst, places in the world right now in that dimension. But yeah, we do see them as a competitor. I mean, we encounter them in a lot of our corporate pitches, and I think. We just try to articulate the differences in our models. The biggest difference being we don't charge a per eligible employee fee. We only take the subsidy from the corporate if the employee adopts a plan. And then the second kind of key difference is we make a revenue commission on revenue we send to partners. So we're actually encouraged to send as much money to partners as possible. The more money we send to them, the more money we make, as opposed to just breakage dependent models where they make less. So. But those guys are doing a lot of interesting things in digital. We're doing a lot of interesting things in digital. I think the world is big enough to have multiple winners. I think corporate fitness is just such a massive tens of billions of dollar market. That you'll see different players win in different regions or different employers.
Yeah, another thing that you mentioned when talking about the opportunity and other areas to pursue was adding wellness opportunities to the platform. So spa, that kind of coincides with, previously there's been conversation that ClassPass would offer this life pass where it's experiences not only within wellness and beyond. So is that still something that you look at as an opportunity and will pursue, or is it more staying closely aligned to like the wellness opportunities?
Yeah, absolutely. The vision of the company from the beginning was about experiences. Actually, Pyle, before I met Pilot was actually called Classtivity, and the angel round I led was to fund the pivot into ClassPass, which focused us back on studio fitness. Before that, it was called Dabble NYC, and it had all sorts of different cool experiences, just anything fun and soul nurturing and inspiring. But it didn't really take off till we focused it on studio fitness. So I think we still hope to just help on the partner side. Our value proposition is to give them an opaque way to clear excess capacity at revenue maximizing prices, right? And we hope that value proposition transcends not just studio fitness, but also wellness and maybe even other cool, experience, small business experience type things like cooking class or concerts or, gig venues and stuff. And on the consumer side, having seamless access, great discovery tools, great, recommendations, algorithms for how to spend your free time, and to book stuff and to fill your life with these great experiences, starting with fitness and then and wellness, which is important to your health and wellness. And but we hope that we can eventually add other stuff. Now, are we anywhere near adding that stuff? No. Wellness, we certainly are going after. It's a new adjacency. It's very complementary. It's very synergistic. A number of our fitness partners like Exhale also have massage or wellness type treatments. So that's sort of a slam dunk opportunity for us. Who knows if and when we'll get to the other stuff. We've done some experimentation in video where we've launched, painting classes and cocktail making class and interior design courses. And there seems to be interest from our customer, but, we're humble enough to say we have no idea if we'll ever get to earn the right to work on that. Right now we're pretty focused on getting through the pandemic, getting our digital stuff going, and then figuring out how to get wellness into the product.
Yeah, on the piece, both with the boutique fitness and also adding wellness, obviously it's a massive opportunity. And what is the definition of wellness continues to grow, everything from spa to recovery to cryo and so on, even the beauty element, personal care within that. One of the interesting things when you start to dig into the platform, a lot of the ClassPass runs on MindBody's API to be able to do some of the booking. Is there a risk in being too reliant on them as the provider of that API?
I'm glad you asked. Yeah, that's a great question. It was a question I had when I was an angel investor, and it's one we've had probably every single fundraising round we've done. And I think the answer is potentially, but we've had such a great relationship with MindBody that it's worked, and they've made a lot of money from their relationship with ClassPass. So the risk is that they would charge for API access, and they did decide to charge for API access 4 years ago. And they raised prices a few times. And ClassPass, luckily enough, had a model that allowed us to consume and pay those prices instead of handing them off to our partners. So it's been a symbiotic relationship, and we paid them a lot of money because ClassPass couldn't have scaled nearly as fast as if they hadn't had a large segment of the studio population already connected online, right? And so we always saw it as like paying Amazon Web Services. It was just sort of a great investment to make in order to scale quickly. As we've grown internationally and as we've expanded beyond studio fitness and added things like gyms and pools and climbing facilities and wellness, we've had to actually create our own API. We have over 20 different software integrations we support. So, our sort of reliance or the percentage of volume that's going through MindBody has gone down, but either way, we're pretty happy with the relationship. And Rick's been, a mentor to me personally, and has sort of been there from the journey from the beginning of even before I got involved with Pile. So they've been a great partner, and we couldn't have built the business without them. And I think we have a sustainable relationship model going forward. And yeah.
Yeah, I think it obviously makes a ton of sense, and kind of to some extent, as you mentioned, the cost of doing business, almost like with Amazon Web Services. As you look ahead, is it kind of on the roadmap to say we want to own more of the transactions within the booking stack, or is it, we're just going to balance kind of what we're using MindBody's API for with our own software integrations?
Yeah, it's a great question. I mean, we have no plans to build booking software. There's so much out there. If you don't like MindBody, a lot of our customers our partners do like MindBody. So we enable that integration. And if you don't like MindBody, again, we have over 20 other integrations that we support, ZingFit, Mariana Tech, all those other players. Mm-hmm. And so there's a lot of choice already out in the market. I'm not sure, ClassPass introducing, another option does anybody, that much good, and is sort of distracting. So we've really focused on having like a world-class, Google, Amazon, Microsoft quality API that all of these different integrators can write to. So what we care about is just being able to get that inventory, online. We don't really want to make money from charging partners for software that we're building for them. We'd rather just give them, effectively costless revenue and take a cut of what we send them.
Sure. And kind of pivoting a little bit here, I know one thing that's come up and, kind of impossible not to talk about is COVID-19. We're recording this as gyms and studios begin to reopen, obviously after months of lockdown. ClassPass and you published a piece, revenue basically went to zero, and how that impacted the industry. But can you just talk about how the pandemic has impacted not only ClassPass, but the fitness industry in general?
Yeah, it's been, obviously devastating. Few industries are getting hit as hard as fitness, airlines, hotels, and a few others, but, retail, I guess. But we had a really interesting vantage point because we're a global business and we have operations in China and Singapore and Hong Kong, early markets. We saw COVID-19 enter, have outbreaks, but I think we got lulled into overconfidence because we saw effective government responses. Singapore and Hong Kong were very quick to clamp down, introduce mass testing schemes, border controls, temperature checks in office buildings and in fitness studios and all sorts of stuff, contact tracing. And they were able to kind of snuff out the initial outbreaks. And so the resilience in the studio fitness market was strong. Like we saw reservation volumes collapse and then rebound. So we thought, oh, great. Every Western government will see what those countries and countries like Taiwan and Korea are doing, and just emulate those responses. And it'll be relatively well contained. And sure, there might be little re-outbreaks here and there, but that is obviously not what's happened. And so within about 10 days, we saw all of our first in Western Europe and then in America, starting on the West Coast, we saw 95% of our gyms and studio partners having to, through government mandate, close their locations down, right? And our response was interesting. A lot of fitness players decided to keep charging and charge if you had things like digital. We were really lucky in that we had just raised a large round in December. So, we have enough funds to kind of get to the other side of this thing. And so we were able to just proactively pause and everybody's billing relationship with ClassPass. So they have these credit banks so they could still spend on our video stuff that we launched in about 10 days. We launched live streaming capabilities for all of our partners to just basically try to move their businesses to Zoom or Facebook and use us to monetize that content. So we decided, not to continue to bill our customers during that time and just kind of let everyone just take a pause, take a deep breath. If they want to, they can buy more credits to spend on video. We decided to forego commission on our partners because our attention very quickly went from, okay, we're going to have to shut all of this stuff down, to how do we make sure our partners don't go out of business? Because that's probably the single biggest risk to ClassPass. So we not only forewent commissions on video revenue, we also launched a partner donation campaign, partner relief fund, where we asked our customers to donate and committed to matching up to $1 million of donations. And we launched a government petition and lobbying effort and got a bunch of the top industry CEOs on board on that to try to get rent relief and PPE and a bunch of those things, which again we'll continue to fight for. So it's been pretty devastating, and we have a digital product that we're excited about. But to replace the scale that we had achieved offline is going to take a long time. And right now we're just doing everything we can to try to keep as many folks in the industry and business as possible, and to get the governments to do more, both to contain COVID, but also provide more relief to health and wellness, and specifically to studio fitness and individual wellness providers.
Part of the conversation has been that COVID kind of accelerated this shift to digital fitness. And there are folks that kind of come down on the side that say this was in the cards and however you look at it, brick and mortar is always going to be a piece of that experience for people. They want that community element of the boutique experience. And then other folks who are more extreme say, no, this is the end of boutique fitness and kind of brick and mortar fitness as you think about it, and liken it to a retail apocalypse. But where do you come down on it? Obviously, someone who's not only running the company like ClassPass, but passionate about the space, as you mentioned. How do you think this plays out as things do start to come back online?
I think that our view is that the future is heterogeneous, right? In the same way that I think the best workout routine for each of us is some permutation between all the options out there: running in the park, swimming, studio fitness, and within studio, are you Pilates, yoga, bar, CrossFit, boxing, boot camp person, circuit training, some combination of gym workouts, weightlifting, or cardio. Like, each of us has our own permutation as to what's best for us, what's going to keep us motivated, get us the best workout physiologically. I think the same thing is true between offline workouts and online workouts. Some of us don't like online or digital at all. Others are fine being 100% into digital. I think most of us, it's probably some combination of some offline spread across a variety of routines or activities, and some digital experiences. Like I use digital stuff a lot, our own stuff. I use some of the connected fitness stuff. So I don't think it's kind of a single outcome. I don't think there's some structural shift that's going to only favor digital versus offline. In fact, we've seen demand is incredibly resilient for offline, probably more so after people have been locked up in quarantine. They're craving getting back out and having an experience, and a communal experience, and a shared experience. And I don't think digital is anywhere near replicating the offline experience. Like if you go do a workout, at Rumble with Noah, or Solid Core with Ann Malem, or Berries with Joey Gonzalez, and then you try to replicate that, in your living room, good luck, right? There's just nothing like the immersiveness of having that community, that equipment, that intimate atmosphere, the camaraderie, and the instructor interaction. It's hard to replicate. So our view is certainly it accelerated digital trial and evaluation. And some people it'll drive adoption, and a lot of the connected fitness companies are seeing accelerated sales. Makes a ton of sense. But our view is, the pie is huge, right? Just in America alone, there's like 300 million Americans, and only 50 million odd have a gym membership. Only
Right.
20 million odd are doing studio fitness. So there's a lot, there's a big pie here to capture. And I don't think I think that, I think both will do fine long term.
Looking at, the ClassPass roadmap, we mentioned the corporate wellness, adding wellness and potentially experiences beyond fitness and wellness. Do you see the digital piece being part of the roadmap going forward, or is this something just in the interim that you're using to bridge the gap with the COVID-19 lockdowns?
Great question. Yeah, because we see the future as heterogeneous, I think digital will be a bet that we make long term. You may know we actually had launched a digital product back in 2018. It was called ClassPass Live, and it was a heart rate monitoring based real-time feedback system. And what that was actually just an experiment. We were running an experiment to see if we should build a platform that would let our brand partners have their own interactive fitness streaming product. And again, ClassPass would just take a take rate on the revenue that they're able to generate for them. We decided to shelve that product just because our offline business was growing so fast. There was so much opportunity. We wanted to get to corporate. We wanted to get to wellness. So we put those plans on pause. But a lot of those lessons learned and tech is why we're able to relaunch a video product in only like a 10 to 14 day period when COVID happened. And so we launched a live streaming product, and we've learned a lot from that in terms of what's our partners like and don't like about live versus video on demand, what consumers like or don't like about, live versus on demand versus interactive. And so we're kind of now taking those learnings, sending as much money as we can to partners, but also figuring out what are the next couple of shots on goal we want to take on digital. So I think we'll continue to invest in digital, for the foreseeable future and probably the long term.
And it probably at this point, it might even be too early, but have you thought about how the pricing plays into that and what that might look like for partners or the use of credits on the consumer side?
So right now we've let partners, set their prices for live stream. And didn't take a commission on revenue like we normally do. We just waived that. And so we've just been experimenting to see, how do partners price? What does consumer price elasticity look like? Try to coach partners who we think are overpriced or underpriced on how to better sort of yield optimize. But we don't, it's too early. I can't be prescriptive yet on, how we're going to price and package stuff, going forward. But certainly thinking, one principle is, we've been letting people use all of their credits that they bought for offline for digital. And so that's an interesting kind of debate, is like, do you have a different SKU or not? Our bias has been to keep it as simple as possible for end users. And, I wouldn't be surprised to see, some sort of an add-on option or something down the road, but nothing to announce yet on that front.
Sure. And then one thing, kind of changing gears, moving away from COVID, we talked about certainly the potential and the opportunity as ClassPass continues to grow, and realizing that $1 billion plus valuation. How do you think about returning value for shareholders? At this point, having raised a substantial amount of money and certainly yourself significantly invested in the company, is it a matter of going public, achieving profitability at some point, maybe an acquisition, or how do you think about those things?
Yeah, our plan is to IPO. We just have no idea, when in the future that will be. But our goal is to be an independent, generational technology company. And like many of the great sort of internet brands that are out there, and we feel like we've got a really, really, really long roadmap and a lot left to prove and learn and iterate through. And I think if you look at the history of our company, one thing I'm proud of has been, we haven't always been right or perfect, but we've always been committed to sort of iterating and figuring out how to earn the right to go after the next big opportunity. And it's been fun. And I see us, continue to do that as an independent company. So plan is definitely to IPO. I just have no idea, how soon that may or may not be. And you can never exactly promise what the future looks like, but that's the plan.
Absolutely. And Fritz, we'll get you out of here on this. Where can folks learn more and just see what's happening at ClassPass?
Yeah. Most of you on the partner side, hopefully you're working with us. And if not, feel free to reach out to us, partners.classpass.com. And for consumers, hopefully you're a subscriber. You can choose from our lightest membership plans. And right now you can actually join without being a subscriber and just check out the video content we have and get a feel for our app. So just go to classpass.com. And thank you very much for the time.
Yeah, absolutely. Thanks for joining us today. Thanks everyone for listening to today's episode. For more from Fitt Insider, visit insider.fit.co and subscribe to our weekly newsletter for insights and analysis on the business of fitness and wellness. Then, go ahead and subscribe, rate, and review the podcast. See you next time.